Hello everyone and welcome back to Crypto Chris YouTube channel. Today we are diving into a topic that's on everyone's mind right now, the recent dip in Bitcoin and broader crypto market. As you can see from the chart, things are looking red, prices are crashing and there is a lot of uncertainty in the market. But is this something we should be worried about, or is it just another typical market fluctuation? Let's break it down and take a closer look. Here's what the chart currently looks like. We've broken below $75,000. At one point we've been at $74,500. Right now we are just above $77,000. Everything is in red, and all this situation is causing some bad thoughts and bad mood with many people in the market. Now let's zoom out a little bit. In the grand scheme of things, this move is hardly significant. One of the biggest price drops I personally witnessed was back in March 12, 2020, when Bitcoin lost 50% of its value in around 2 days. That move was so violent, but you can barely see it in today's chart once you zoom out the bigger picture. And that's the lesson. If you're new to Bitcoin, today's volatility might feel brutal, especially if you bought in a top and didn't dollar cost average, but in the long-term hodlers, we know that this is just another small dip in a very long and very upward sloping road. What feels like chaos today becomes invisible over time. Of course, when Bitcoin drops, altcoins usually drop even harder, and that's exactly what we are seeing now. This is typical behavior in the crypto cycles. When the market is bullish, many altcoins tend to outperform Bitcoin on the upside, but during corrections, they also tend to crash more violently. It's a classic higher beta effect. Right now, XRP and Ethereum are both down like close to 15% in the past 24 hours, while Bitcoin is down around 7% in past 24 hours. And also, in just last 24 hours, we also witnessed a massive flush of leverage positions across the board. This isn't just a price movement, it's a leverage reset. And while painful, these events are often necessary to build a healthier foundation for the next leg up. And all of this is exactly what happens when markets are full of highly leveraged traders. If you're trading with 10x leverage and Bitcoin drops just 10%, you're wiped out. That's a 100% loss on your position. Some platforms even offer 100x leverage, meaning that you can get liquidated if just 1% price moves. It's completely insane, and unfortunately, some people will only learn this the hard way. But let's zoom out and let's put this in a context, especially for Bitcoin hodlers. Before we continue with the video, Binance is launching another project on their megadrop platform, KernelDAO KERNEL, and if you're holding BNB, you may be eligible for some free tokens. Here is how it works. Lock your BNB to participate in Binance BNB locked products to earn a score for the megadrop. Engage with Web3 quests for additional rewards and score multipliers and earn KERNEL tokens. The total rewards pool for this megadrop is 40 million KERNEL tokens. That's a 4% of the total token supply. KernelDAO is rapidly growing in the Web3 space as a leading risk-taking protocol that powers the kernel, kelp, and gain ecosystems. It's already made waves with a TVL of 2 billion across its platforms, and it's backed by institutional players like YZI Labs, Cypher Capital, and more. KernelDAO is also known for its powerful risk-taking infrastructure, which currently powers over 30 projects across different blockchain sectors. The kernel token will be used for governance, slashing insurance, and enhancing the risk-taking ecosystem. Binance is exclusively first listing the kernel, and the megadrop is your chance to get in early. You could be part of the wave of people receiving airdropped kernel tokens based on your participation in Binance megadrop quests. To get involved, log in your Binance account, and if you don't have it already, you can use a referral link in the description of the video to get a 10% of the discount. Lock your BNB and participate in Web3 quests to accumulate scores. Keep an eye on the oncoming announcements and join the megadrop for a chance to earn kernel tokens. Bitcoin wasn't designed for short-term traders. That doesn't mean you can't trade it, but personally it doesn't make sense to constantly trade something that's been going up massively over time. Bitcoin was built for conviction. It's built for time, not timing. We have also seen people take out Bitcoin-backed loans either to buy real estate or fund a lifestyle or even to buy more Bitcoin. And while some of that can be done responsibly, it's days like this that they remind us how dangerous that leverage can be. You might plan to increase your stack, but in reality you risk getting liquidated and losing all of your Bitcoin. Instead of amplifying your gains, you could amplify your losses. That's why I personally prefer to hold Bitcoin without leverage, If it ever went to zero, I know how much would I lose. I would lose 100% of my investment, but I also know the odds of the Bitcoin going to zero are incredibly small. And that's what gives me a peace of mind. With all that being said, Bitcoin is ultimately for people with low time preference. Meanwhile, coins like Trump Coin and other short-term hype projects tend to attract a high-term preference behavior. But what does that really mean? High time preference means you're focused on immediate gratification, making yourself feel good today regardless of long-term costs. It's like Aesop's classic fable of ant and the grasshopper. While the ant spent the summer working hard and storing up food for the winter, the grasshopper spent his days playing the fiddle. When winter arrived, the grasshopper was caught off guard unprepared. You see, high time preference behavior everywhere, with people with negative net worth leasing expensive cars to look successful, trying to buy status instead of building real wealth. Low time preference, on the other hand, and this is where most true Bitcoins live, is all about planning ahead, delaying gratification, and building for the future. It means investing instead of spending just to impress. It means living below your means today so you can live with freedom and abundance tomorrow. Bitcoin rewards those who prepare like Ant, not those who dance through summer and hope someone saves them in the winter. One of the things that makes Bitcoin both interesting and challenging is its volatility. It's constantly being covered by the media, surrounded by the FUD, fear, uncertainty, and doubt, and as a result, many people simply can't stomach the ride. But here is the thing. You will never be able to stay on this path and benefit from Bitcoin's long-term potential unless you truly understand it. If you're just copying me or following other Bitcoins blindly, your conviction will disappear the moment things get rough. On days like this, you'll panic, you'll sell, you'll regret. But if you have taken the time to really understand Bitcoin, the monetary system is disrupting, the economics behind it, the long-term scarcity, then dips like this don't scare you. They actually excite you. I actually bought some more Bitcoin this morning, and why? Because I know what I hold. I know what Bitcoin is, and I know that the media noise, the leverage washouts, and the daily price swings are just noise in the grander picture. Of course, I could be wrong, and that's why proper position sizing matters. You don't want to be in a situation where Bitcoin drops and you're suddenly forced to sell or stressed out to the point of sleepless nights. But when you truly understand the asset, you have educated yourself, those down days feel less like panic and more like opportunity. In a fiat world where every time there is a serious market drop, the response is almost always the same. Lower interest rates, print more money, and flood the system with liquidity. It's a rinse and repeat cycle. The central banks monetize government debt, deficits balloon, and short-term solutions is to inject even more leverage into the system that's already buckling under its own weight. It's not healing, it's making symptoms. It's like trying to cure burnout with caffeine, it works until it doesn't. The dot-com crash was followed by the housing bubble. That burst led to global financial crisis and the response, more debt, but this time pushed to the sovereign level. Now we have US government running massive deficits, a national debt north of $30 trillion, and unfunded obligations that make that number look small. Each crash in the fiat world leads to a bigger patchwork fix, more systematic fragility, and more moral hazard. It's slow spiral towards instability disguised as recovery. Now contrast that with Bitcoin. Bitcoin doesn't get a bailout. It doesn't have a central planner pulling strings. When the price crashes, a leverage gets flushed out. No one is coming to rescue the degenerate gamblers who went 50x or 100x long. The system resets. It purges excess. It becomes healthier. And that's what the market looks like. Bitcoin shows the temperature in the room. It doesn't hide it behind manipulated CPI numbers or sterilized yields. The volatility isn't a bug. It's a mechanism through which system strengthens itself. It's honest. Crashes in Bitcoin aren't about printing money. They're about burning that weight. It's painful, but it's functional. And that's why Bitcoin, despite its wild price swings, it's ultimately more robust than a fiat system that can't afford a mild correction without a risking collapse. You don't have to pretend the volatility isn't there, you just learn and understand it, to expect it. And if you're a true long-term thinker, you learn to appreciate it. The irony in all of this is brutal. When Bitcoin eventually crosses $1 million, and yes, that day is coming, whether in 2 years or in 10 years, people who never paid attention, who never took the risk, who never even try to understand it, will suddenly turn hostile. They'll say you got lucky, that it's unfair, that you didn't earn it, and some will go even further, pushing for ways to tax it, seize it, redistribute it. Because from the outside, they'll see the number on the screen. What they don't see is the emotional weight you carried during every correction. They won't see the nights you sat watching the price drops 20% in hours, wonder if you weren't crazy. They won't see the moments you questioned yourself when mainstream media and so-called experts told you it was over again. They won't understand what it meant not to sell when everyone around you was panicking, or how hard it was to keep your conviction when it was lonely. On the long-term chart, the journey looks obvious, a smooth curve up and to the right. But living through it, that's another story entirely. It's a mental warfare, and I often like to use this picture. And useless you experience that firsthand, you don't get a comment on who deserves what. This is why Bitcoin rewards low time preference. It's not just a slogan, it's the filter. Every wave of volatility shakes out the noise. It clears the board of people looking for shortcuts, fast gains, or dopamine hits. And what remains are those who are thinking generationally, who are building something real, not chasing a quick win. Fiat, on the other hand, encourages the opposite. Borrow today, spend tomorrow, impress people you don't even like. As long-term the economy stays afloat, no one questions the rot behind it. And when people say Bitcoin is too volatile to be a currency, what they're actually saying is that they don't understand it. They don't understand the value embedded in it. Independence, discipline, responsibility, and Bitcoin doesn't babysit you. It tests you. And that's exactly what makes it so powerful. We are witnessing shifts that suggest that the US financial system and global markets are on the brink of a major transformation. Trump's tariffs, the rising inflation, and the uncertainty surrounding the US Treasury bonds are all contributing factors to this. While many are speculating about the impact of tariffs, especially with the key global players like China and Japan being hit by trade restrictions, it's clear that the old ways of managing these economic tensions are no longer sufficient. The US, once the dominant force in the global finance, now finds itself in a vulnerable position, unable to maintain the same level of control of its monetary policies. And this is where Bitcoin enters the picture. Bitcoin, despite the turmoil surrounding traditional assets like stocks and bonds, continues to prove its value. As seen in the past few years, Bitcoin has decoupled from tech stocks, offering a safe haven for investors during the times of global unrest. With no counterparty risk, no debasement risk, and the ability to transcend national borders, Bitcoin is becoming more than just a speculative asset, it's positioning itself as a true store of value in an unstable world. While traditional investments may be experiencing turmoil, especially with rising US Treasuries yields and the likelihood of more inflation, Bitcoin remains strong. Its decentralized nature and the potential for it to replace the US Treasuries as a global reserve asset puts it in the forefront for the next financial evolution. As the countries move away from US dollars and the US Treasury bonds, Bitcoin is poised to fill that gap. This shift won't happen overnight. We are likely to see more volatility, especially as governments continue to grapple with their enormous debt and the growing pressure to restructure global financial systems. But Bitcoin's fundamentals properties make it unique position not only to survive these transitions, but thrive in them. In conclusion, while we may not yet to know the full extent of the global reset, one thing is clear. Bitcoin is a crucial part of a new financial world order. As the US faces mounting challenges, Bitcoin offers a lifeline, a non-sovereign, neutral asset that transcends border and geopolitical tensions. As global confidence in the US financial system wanes, Bitcoin will continue to reign as its global reserve asset, providing both security and opportunity for those who embrace its potential. And that's the thing with the Bitcoin. It's all about the long-term view. Sure, short-term volatility can be tough, but when you zoom out in reality and understand what you hold, these dips become less daunting and more like opportunities. If you found this content valuable, please leave a like and subscribe in order to not to miss on future videos. Stay strong, HODL, and keep an eye on the bigger picture. Thank you for watching, and I'll see you in the next video.